Hey guys, so everyone wants to be self-made. So in today's vlog, we're going to speak to those that are self-made. Hey guys, welcome back to the vlog. Special guest, Robin.
Thanks for having me.
How are you?
Yeah, really well, thanks, Toby.
Self-made. So let's talk about super funds later.
Yep.
Let's start to talk about or introduce you to roughly 7,000 odd people that watch the vlog on a regular. Thank you so much. Give us a bit of background.
Yeah, so my background, I guess, is I'm from Sydney,
Yeah.
a bit like yourself.
Two of us.
Spent most of my time hanging around in Bondi.
Two of us.
In terms of career background, I was a banker. I worked for Macquarie Bank for 10 years.
Not two of us. Just
And I did lots of different things. I worked in the US for a while. I worked in London and Australia.
Where were you in the US?
I was all over the place. I was in San Francisco for a bit. I was in New York for a bit.
Cool.
I was down in Florida for a bit. You know.
I was 9 years in Los Angeles.
Oh, there you go.
Yeah.
Great city.
So I was hoping that we actually come back to the two of us. But the US is okay.
Yeah.
Cool.
And then, so I left that sort of corporate banking landscape in 2011.
Yep.
And started getting into sort of more entrepreneurial stuff with technology.
Yep.
Been involved with a startup business called MoneyMe,
Yep.
which has been really successful and continues to go really well.
Yep.
And now with Self-Made, doing
Okay.
some work around the self-managed super fund and superannuation wealth
So-
management sector.
Would you consider self-made your second, third, or fourth venture?
I'd say it's probably my third venture.
Okay.
Yeah.
All right.
So I've done other things, but it's certainly the one where I've taken probably the most responsibility in terms of running the business and
Right.
driving it forward.
Yeah.
And it's been really exciting.
Awesome.
Great bunch of guys working with.
And so I got an email from your team earlier in the week.
Yeah.
Around sort of like some really great data points, but firstly on you and some of the history and success, which I'll link in the bottom of the description, but really around sort of like your hypothesis for where we're at, potentially as a nation or maybe as a global.
Yeah.
I'd love to understand whether it is national or a global, and whether or not we're sort of coming to the end of the honeymoon.
Yeah. Oh, look, it's a really interesting question, and everyone's got a view on it. Maybe why I have these sorts of thoughts is I guess I studied economics, and
Yeah.
I like that sort of element of thinking about the world through a macro lens and what's sort of going on. So I think we are in a really interesting time, particularly for Australia.
Yep.
But also just on a global sort of basis, there's been a really low interest rate environment for a very long time.
Yep.
It's totally unprecedented in terms of the history of modern economies to
Yep.
run zero interest rate policy for as long as countries like the US, Japan, Europe have been doing. So that's going to pose some really interesting challenges for countries like Australia, where we've sort of dodged a lot of bullets through GFC and
Yeah.
that other countries have really struggled with, but
Yeah.
a lot of our ammunition and the state of the economy has probably chewed up a lot of its exits
Yep.
from those things, and it's going to be an interesting time.
It's very interesting. I think from an entrepreneurial standpoint, you think about, well, some people think about, at least I thought about on my first couple of ventures, what's the liquidity event? Like, what's the exit here? What's the exit strategy? I don't think about that here today in my current vehicle. But I'd imagine for a lot of entrepreneurs out there, as that starts to potentially make an impact, maybe a decline in the economy, that could potentially hurt.
Yeah, I think it could hurt certain exit events.
Yeah.
It makes IPOing harder.
Yeah.
Right now it's an incredibly difficult market to get an IPO away in.
Yep.
And that's been the case since sort of October last year.
Yep.
And I think, but it does mean that other exit events are probably more likely to happen.
Right.
So if you've got traditional incumbent players that are struggling to get growth organically and they're also finding markets challenging, they might be acquisitive around growth if you've got a
Interesting.
high growth business model. So
Yep.
I think certain avenues will become harder,
Yep.
things like public market exits, but other avenues might be easier to get done. So it's always cuts both ways.
Interesting. And so, being that you are self-made
Yes.
and running a venture called Self-Made, let's double click on that.
Yep.
What's it about? What are you doing?
Yeah, so I guess what Self-Made is, it's technology, it's financial technology that's really looking at evolving the practices done by accountants, lawyers, and financial planners around managing people's superannuation balances. So
Interesting.
we focus on self-managed super funds, which typically have a higher sort of balance, and people that want to take more control and ownership of their financial futures.
Yep.
So it's people like you and I who are pretty used to making a lot of big financial decisions, and so typically want to take more control over their money.
And so I understand self being
Yeah.
I can manage it.
Yes.
But if I've got no experience in that, or I have no background in economics,
Yep.
is there a B2B play where you would sell this service into an org for them to be able to manage it on your behalf, or is that something you guys do as a service?
So one of the things we're building out in the portal is the ability to provide advice around investment. So at the moment we don't do a lot of work in the advice space, but as we're evolving the product,
Yep.
we'll do more and more around helping people invest that money.
Very interesting.
So that's where we want to get to, but you've got to start somewhere.
Of course.
And where we started was probably what we thought was an easier entry point, which is automating the existing processes
Yep.
and leveraging technology to make the process of being compliant, of lodging tax returns,
Sure.
making the investment execution much easier, all of those sorts of things.
Yep.
Signing documents electronically, so you don't have to go into an accountant,
Yep.
with a box of receipts that you've kept for the last year. So getting all of those sorts of processes.
It's
automated.
interesting. Before my Creative Cubes venture, or my parent company, Neon Life, before we embarked on Creative Cubes, Orange Theory, Rebel Monk, and all the brands that sit inside that portfolio, I ran a dog walking business out of Los Angeles, and we served 3 cities: LA, Orange County, and San Diego. And the app was self-help, so you could basically hit the button on your smartphone, and a dog walker would show up to your home, walk your dog. You could track and trace in real time. And the whole idea was it's self-help and accountability. But what ended up happening, we actually built a division within the organization, which was that white glove service, where people that were either not used to the technology, or like the idea of the technology, i.e. I have no economic background, I'm going to manage my retirement fund or my super fund here, or superannuation. That's really kind of a concerning thing for me to have that power.
It's a big decision.
So what we ended up having here, and we're just talking about walking dogs, which one would argue is probably one of the top 3 possessions one would have in their life: their home, their
love
kids,
their dogs.
and their dogs, right? People would end up calling the 1-800 number, and we would actually enter the request into the system for them and manage that process, even though it was almost like it existed and we had resources dedicated to answering the phone, but like if someone really just wanted to order a dog walker, they could just hit the button. That division ended up becoming one of our most profitable divisions, because like our goal was, we're going to help people like create accountability here and give them all the tools that they need, but that was really overwhelming. And then we're not even talking about financial services here.
Yeah,
I can only imagine, which is my point, that as you start to add traction and add customers, that there will be a division within, even though you're self-help, that helps them self-help.
Absolutely. I think it's probably not. Our service is actually very hands-on still. So we use a lot of technology to make processes smoother, but we speak to every single one of our clients.
Yep.
We call them. So if somebody comes on and starts setting up a self-managed super fund to our platform, they'll get a call from us within 10 minutes of going through that process.
Amazing.
And we'll be talking to them about what are the reasons, why are they trying to set up a self-managed super fund, what do they want to do with that, and that's really important in the process, because people want to know that there's a person behind the technology, and it is a big decision, and not everybody, the rules are super complicated. So that's why we sort of built the business, because it's not very easy for people to get this information and get it in a way that's easy to digest. And then so when they come to us and we get on the phone with them and we also help them through the process, we find that both the client enjoys that experience, and we actually find out a lot more about what they're trying to do and can actually help them do that.
And do you use any component, like any AI in it, or
Yes.
is it Yeah, but just that direct one-to-one iteration of product because I had this conversation with a proper customer at volume needs ABC.
So we actually, we do. So we've been building out our AI capabilities around some of the mundane, highly repetitive parts of administering these things. So looking at bank statement transactions that people have on their accounts and figuring out from the description what actually that is and matching that into the what is effectively a general ledger for accounting for those transactions. So that's really interesting stuff that we're doing. And we also want to start getting more around the rebalancing the portfolios and saying, well, you're overweight in this particular area. But most people tend to be overweight in self-managed super funds. Like they typically are doing a particular thing with that. They'll have an idea. They either want to buy a property with their superannuation or they want to invest in a particular industry or sector. So we tend to find that people deliberately want to be sort of overweight within their self-managed super fund.
Very cool. And so you've raised some money.
Yes, we did.
You're looking to raise some more?
Looking to raise some more, yeah. So we've raised $1 million in seed funding back in June.
Yep.
And we've been live in market since October last year. And we're looking to raise another $1 million to sort of, it's sort of like an extended seed round, or a second tranche of our seed round. And that's really to just grow the customer base. So we really want to expand our customer base over the 2019 year to a sustainable level, and then from there we'll continue to build out the product offering.
So product, I was going to say, so product with sort of like the first tranche of money, obviously you've built product and you've got something now you can scale, so the next flush of cash comes in to help get the adoption rates up and customer base, and then I suppose from there you should be able to either scale up with maybe next round, or alternatively like iterate with the input of cash that's coming through.
Yeah, I mean, client acquisition and all that sort of stuff, particularly within fintech sectors, is quite expensive for businesses, and we've done a great job of getting our customer acquisition rates to a sustainable level, but it's still, you've got to grow your customer base.
Totally,
so every business in our world goes through that scale-up phase, and it's really good once you get to the scale-up phase, because a lot of the risk around product evolution and IT budgets blowing out and all those sorts of things are behind us, and it's really, we know what we do, we know how to do it, we've proven that model, our customers like what we do, we get, we've got revenue in the door, now it's just about growing the customer base.
I love it. Well, love to circle back with you in say 6 to 12 months time, qualify or re-qualify everything you've said. And good luck, man. If there's anything that me or anyone in my community can help you with, I think you was meeting with the guys from Investable. Yeah,
so John Lechty down in your Richmond office, and I were catching up. He's actually on the advisory board for MoneyMe with me as well, so we've known each other for a long time. But yeah, thank you very much, and what a great space.
Oh yeah, man. Thank you so much. Guys, I'll put all the details in the description below if you're watching on YouTube, or description above if you're watching it via the vlog. Mate, good luck.
Thank you very much, Toby.
And we'll see you soon.
Cheers.
Thanks, guys.